I'm University of Illinois Extension's Todd Gleason. Thursday, the United States Department of Agriculture released the prospective plantings in the USDA's grain stocks report for the quarter. Darrel, Ag Economist from the U of I, is here with some reaction and analysis. Why don't you take me through the raw numbers to begin with?
Starting with the stocks number, USDA said March 1 inventories of corn at 5.4 billion bushels, soybeans just right at 1 billion bushels. Plantings of corn expected to be right at 97.3 million acres, soybeans at 77.1 million.
The acreage report was just about as expected?
For corn certainly was. The intentions are right on the average market guess. I think soybeans came in a little less than the market was looking for. Rather than 77.1, maybe 78 or 78.5 was the expectation going into the report.
If the corn acreage comes to fruition, it will be the largest set-on number since the Dust Bowl era.
Yeah, it's a lot of corn acres. It's just marginally different from what we planted last year, and suggests that we are starting with the potential for a large crop again in 2013.
And as has become the case, there's always a surprise. Those came in the grain stocks numbers.
Without a doubt, both corn and soybeans, and even if we talked wheat, we'd see a surprise there as well. The corn number at 5.4 billion bushels was about 7% larger than the average trade guess, 350, 400 million bushels, something in that range, and implies that feed and residual use of corn during the previous quarter, which would be the second quarter of the marketing year, was extremely small. Last year, for the same quarter, the calculations suggested we fed something over 1.5 billion bushels of corn. This year, something less than 1.1 billion. And obviously, the market was expecting to see a bigger disappearance and a smaller stock number than what the USDA revealed.
That is not accounted for in the wheat on hand, or the stocks number for wheat, which you might have expected to be used more quickly than what USDA is reporting, based on feed usage.
That's right. Wheat, we hear a lot of anecdotal reports that, particularly in cattle country, that there has been ongoing large wheat feeding. And we did see that big number in the first quarter of the wheat marketing year last summer. But since then, it really has not been revealed in the stocks number. And my quick calculations for the March inventory of wheat suggested that we had a small negative number in the feed and residual category during the quarter. So that report does not confirm a large wheat feeding, even though anecdotally we thought we saw it happening.
The soybean number was off pace given what you thought the exports were?
Well, basically, the question on the stocks report always centers around this feed and residual and seed category. It's a small category of use, but highly variable from quarter to quarter and year to year. And most people had just kind of plugged in an average rate of disappearance in that quarter. And what the stocks number implies, again, is a negative residual disappearance of soybeans during the quarter. So rather than a small positive number, the small negative number really swung the stocks number by 50, 60 million bushels, which in kind of a tight supply situation is a pretty big deal.
All in all, it should make the June 1 grain stocks report really interesting to watch.
It really is. It's a little bit reminiscent of 2009, 2010. The March 2010 corn stocks number was surprisingly large and implied very low feed residual use of corn during the quarter. And then we came back in June and just reversed that. So not suggesting that's going to happen this year, but it does feel like we've been here before a little bit.
Darrel, thanks so much.
My pleasure, Todd.
Darrel, Ag Economist from the University of Illinois. I'm U of I Extension's Todd Gleason.